This is episode 66 of the SteadyTrade Podcast with your host, Tim Bowen.
I always say, if you have a coulda, woulda, shoulda attitude in trading, you're going to have a bad time.
And Steven Johnson.
Well, I woke up in a few random beds over the weekend, but that's nothing to do with the neck brace.
Today, the guys once again chat with fellow trader Arick Russell. Arick spends some time today explaining why he looks to trade more than just penny stocks. It's another good one, so let's jump right in.
Welcome back to possibly the most ridiculous episode of the SteadyTrade Podcast. Now, not ridiculous because of our guest. We have one of our favorite guests, repeat appearance, Arick Russell. But I'm looking at my co-host partner, Steven, after weeks of making the same repetitive mistakes, compounding losses, overstaying in trades. We finally had a breakthrough on a recent episode, and he shows up today in a neck brace. So before we welcome Arick Russell, AR Trading on Twitter, Steven, you got to give me a little bit of background because I had no idea. Or maybe I'm being punked. I don't know at this point.
What neck brace? You think I'm wearing a neck brace? You guys can see the neck brace. I thought it was too low for the camera. You guys can see it.
Hey, it's not that noticeable.
Arick made a joke earlier saying that after my recent losses, I had I hung myself, and I thought, well, I thought about jumping off the balcony, but I'd never come to the conclusion of hanging myself. But no, the neck brace. It doesn't come from hanging myself.
Hey,
does anyone want to have any other guesses? Any other guesses?
I saw some of your Instagram posts, and last I knew, you were having a pretty good weekend. But I don't know. I have no guesses.
Well, I woke up in a few random beds over the weekend, but that's nothing to do with the neck brace. What actually happened is, and I'll just drop some clues, it involved a crowbar, a multimillionaire, and a Twitter argument.
No. Okay, so it is a prank. It is a prank then.
Tim Sykes took tying me up a step further, and he's now beating me with a crowbar when I take big losses. But I'm not meant to tell anyone.
Okay, so you're just gonna keep it as like a domestic abuse type situation. So
it's a Sykes-mastic abuse. No, that's a terrible one. And no, what happened was I've just been looking down at my computer far too long and making far too many videos and balancing a job, and it's just a bit of strain. But I'll be fine and back in action in a day or two without the neck brace. But I thought I'd keep it on for a laugh.
You're supposed to do what Arick and I would do and just rub some dirt on it, man. Come on, man up.
I'm just a fairy Englishman. Just a fairy Englishman. Just a girly little Englishman.
So now that if you're watching on YouTube, try not to laugh through this entire episode. Do your best. So again, I'd like to welcome back Arick. Arick was one of our guests a couple months ago, and one of our most popular episodes because we really kind of got into the nitty gritty of Arick kind of finding his way as a trader and refining his style. And, I was really proud of the episode because we really kind of got in depth into a lot of topics. And because of that, we got a ton of comments. Arick got a ton of comments basically requesting him back. So I think we recorded that episode. I think it was back about spring break time. So now we're recording in the summer. So welcome back, Arick.
Well, thanks for having me back. It's been a good few months.
So kind of like why don't you get us up to speed, because last episode was kind of leading up, your journey as a trader, finding Sykes and finding your own way and so on and so forth. Kind of get us up to speed on what has changed since the spring.
Well, I mean, not a whole lot has changed in that regard. I mean, what we talked about last time is kind of where I started to where I'm at now. And just like most traders who start out there, I'm working a 9-to-5 job, trying to trade whenever I can, learning as much as I can. And, we talked a little bit about last time, like 3 or 4 years ago, I found Sykes on Instagram, and I started there, and then I kind of moved out. I traded the penny stock niche there for a little bit, but I found that really wasn't for me. It's not that I don't trade penny stocks anymore, but I kind of wanted to broaden my horizons. So
well, and and a lot of what you're doing is, and it's something that I do as well, and that is, you're trading the, whether you call them higher priced or better quality or whatever, you're trading the quote unquote real stocks that are moving like penny stocks.
And a lot of people get scared away because of its higher price. Just because it's higher price doesn't mean that it doesn't trade like a penny stock. I mean, I've been trading IQ for like a month now. Like every day I have IQ on my list, and you have all these sympathy IPOs right now, like Booyah and ZUO and then Dropbox. All these IPOs is a hot sector. In 2016 we had the low float mania, right? Because basically every day you woke up, and if it had a low float to it, you just pick a stock, throw a dart at it, and you're basically going to make 250% that day, right? It really didn't matter. That's kind of the way the IPO market is right now. You basically, for whatever reason, one moves and they all just go bananas.
Well, and the beauty of, again, IQ, it's like, it's a $20, $30 stock, but the beauty of it is when it moves $5, $6 a share, even, and this is what I talk about, the rule of 10, and I didn't create the rule of 10. It's just, I got it from somebody, but, I always tell people, it's like, hey, you can trade a $2 stock and make 50 cents, or you can make a $20 stock and make $5 a share. It's the same movement. It's the same position size. So that's something that I give you credit, because it's something I talk about a lot, is you don't have to be scared of these $20 stocks if you have a small account.
No, and the good thing about small accounts, especially trading these higher price stocks, is you don't have to take large position sizes. You can still make a really good amount of money in a short amount of time by trading 100 shares or 200 shares, right? You take 200 shares and the stock moves $5 or $6.
That's a good day.
There you go. That's a good day. I mean, that's like a really great day, because what I found it does is that it lessens your emotional response. It lessens the stress that you're going, because, as a penny stock trader, I'll never forget the post that you put, Tim, is the guy trading, I think it was binary options.
Oh, that was epic.
He's like, oh, it's about to make, I'm about to win, and it's going up and down. He's like, oh, it's going to be good. And then it drops. He's like, oh my goodness. Oh no. He freaks out. Right. And then he goes, oh, that'll be okay. Oh no. Oh, okay. Oh my God. No. Oh, it's okay. Oh, and then he loses. He's like, oh. So that's like the mindset of, when for most traders, I would say. And so trading penny stocks, and penny stocks I don't say that penny stocks are bad, right? There's no good or bad or right or wrong way to trade, right? It's just what I found, because I've come from the penny stock market into that other market, which people are a little more shy away from because of the price, and they don't really know how to trade all the other stuff that comes along with it, right? Because you have analysts involved, you have, bank, like JP Morgan, these analysts from these big banks and stuff that are all involved, as opposed to penny stocks, where it's just, you're trading on press releases and all the fluff behind the penny stock, because without the PRs, penny stocks aren't really going to move, unless it's some sort of, biotech stock that's got, new sort of FDA approvals and all these other stuff.
Or if it's like some random
crap,
Yeah, no, just because I remember when I had my fall, a couple of people reached out to me, which is one of the cool things about the trader community. And Arick was like, please just give me a chance to help you learn a little bit about the higher price stocks, because I know you'll nail them. And so what I wanted to ask was, where did you get stuck with penny stocks? And then how did you start to learn the higher priced ones? And what were what was the transition phase that you took on to start getting the higher price stocks?
Well, my thing was with the penny stocks. I saw, like, I had a friend of mine that I've been trading with. I met him through the trading community. He lives here in Houston. A lot of you guys may know him, through Airplane Jane. Airplane Jane.
Sure.
Yeah.
And he's a buddy of mine. You can find at Wolves of Wall Street. Find him on Twitter at Wolves of Wall Street. He's a real good personal friend of mine, and we started at the same time. We started the same way, but he was trading every stock. I was trading penny stocks, right? And he kept telling me, there's more out there, right? And I saw him, and he's progressed so far. And it's not that he was a penny stock trader or he was a all-around trader. He just traded whatever, right? I saw the opportunities that were out there, because not every day in the penny stock market you get a 100 or 200% mover. We talked about this last time, that there may be those days where, and you see it on Twitter all the time. Market's done. There's nothing to trade, right? That may be true in the small caps, right? Because when the market is red, usually the small cap stuff is dead. Earnings season, small caps are usually dead for the most part. Not that you don't get that big runner like, GEVO, or, you get the HMNYs that come up every so often. But for me personally, I like the fact that, if I'm going to do this full time, I want to have an opportunity, because that's why I got into this, is to have an opportunity every single day, right? I want to maximize my opportunity every day. So if the penny stock sector, however you want to classify it, is not moving, I have something that I can go trade the TVIXs or the UVXY like today, when the market is just in the toilet, right? You can trade the UVXY and the TVIX, and they've got such big range. You can still make money in a down market. You can, like look at Netflix or all these other stocks, Facebook. You can trade those when the market is volatile, whether it's up or down, right? Here lately it's been a little bit choppy, where it's not really picking the direction. But I just wanted to maximize my opportunity. And I was very fortunate enough to meet a gentleman named AJ. Some of you guys may or may not know, I trade with him and a bunch of other professional guys in a trading, awesomecalls.com. I was very fortunate enough, I saw what he was doing on Twitter. I don't know how I found it, but I just saw it on Twitter. And I just kind of looked into it. We kind of conversed for about a week. He said, come over, let me just show you what happens, outside the penny stock world, right? I said, okay, let me give it a chance, right? So in the first week, I just kind of sat back and watched, and I saw it basically was an eye-opening experience at that point, because I didn't know how to trade that type of stock, right? I was always like most traders, like, oh, well, I know how to trade penny stocks, because we trade the crap. We trade the news, right?
Right.
Whatever BS news is out there, we're looking to pounce on it, right? But I learned more of how biotech stocks really work, right? I didn't know how to trade bio stocks. I just knew that they were up. Let's go long, right? I didn't really know the correct way to trade them, in a sense, right? Now, I said there's no right or wrong way, but when you know how to trade them and the different phases of biotechs, the phase 1, the phase 2, the phase 3s, and then the FDA approvals, what to look for and why they're going to either go up and fade, or they'll just get a certain point and then you look to short them. I learned how to trade earnings really, really well, right? I didn't know how to trade earnings very well. All I knew was basically, you don't really want to short an earnings winner at 52-week highs, Stephen. But there you go. But you don't want to be shorting an earnings winner, on 52-week highs, because people ask me, well, where's the next target on a 52-week high? Who knows, right? It could be at $50 right now, and tomorrow it could be at $100. You saw the same thing with recent GOS. We saw Goose, and then we saw WWE come up. We've been trading Weight Watchers since it was in the $14. Remember back a couple of years ago when Weight Watchers was $14, and here it sits at like $102, today. But what I was fortunate, to learn from these gentlemen, and I just want to give, a quick credibility to those guys, AJ and a gentleman named Spartan Trading. I was a very technical-based trader and still am to this day, but I actually learned how to trade options as well. And if you really want to build a small account, learn how to trade options, right? Because, I recently learned how to trade options, and I was trading Netflix, right? A $400 stock, right? But with options, you only need $400, $400. And it basically netted $400 investment netted about $1,100 return, right, overnight. And that right there, when I saw stuff like that, I'm like, holy crap, that's an opportunity that I need. So even if I can't trade the equity side of it, I've got the knowledge up here to go to my, plan B, right? If small caps are nothing there, I can't trade anything that's really presents my setup, right? Well, then let me look at options. So I've got all these different avenues to capitalize on my opportunity now.
Well, and I think that is, that's something, we talk about FOMO a lot. All traders talk about FOMO. And I think one of the drawbacks of penny stocks is exactly what you said. I mean, sometimes there's just nothing going on. Today, there's basically nothing. And then you end up doing random stuff, over trading stuff that just isn't your style because you haven't built out that toolbox.
Yeah, and you and as a penny stock trader, I used to. That's what caused me more losses. Is I need to find something, right? I got to find something to trade. I may have that day off, and I'm like, I'm trading today. Something's happening today. Come hell or high water, I'm trading, right? Which is a total wrong mentality to have in the first place. You're like, I'm just going to take a trade and see what happens, right? It's like trading, midday, right? Not really a whole reason to trade midday, right? Right now, I didn't really like what was going on in today's market, so I just basically took the day off. I went.
Oh, there's a reason we record these podcasts at noon Eastern. Yeah.
Yeah, and I didn't really trade today because I just wasn't, over the weekend, and I was enjoying life, right? I had a good weekend. I looked at the market, the futures report this morning. Things weren't looking that great to begin with. We were set to open a few hundred points down anyways. And, I didn't really have to trade, right? Because I know tomorrow the market's going to be there. I'm not missing anything. If the market's not there tomorrow, then we're all in trouble. But
well, I think that's a valuable, everybody, and we talk about this from time to time, it's like there's so many things, and obviously you got to work your ass off in trading, but there's also a diminishing return to trying too hard when there's nothing out there. I mean, hey, again, I talk about my biggest loss ever was it was either FAS or FAZ, the triple leverage ETFs back in 2007, 2008 when those were really hot. There was just like nothing going on in penny stocks for like a week. So I start trading these triple leverage financial ETFs, which I knew nothing about. And that's my biggest loss of my career. But that's kind of like what you're getting at is you get to that point where you're like, well, I got to do something today. I'm not getting anything done. And it can, in my opinion, most of the times it backfires, probably 2/3 of the time.
Yeah. And I always, because I don't teach people how to trade stocks, right? What I do now is, I hold weekly, sometimes monthly webinars on my technical analysis system that I use, because everybody always wants to use indicators. They're always looking for that holy grail indicator that's just going to tell them, when to enter, when to exit. There's not one of those out there, right? I just really basically help traders grade that curve a little quicker with the technical analysis, stuff that it's taken me 4 years to kind of nail down, right? Because I've been through 100 different indicators and I've narrowed it down to about 4 that actually work.
Now I don't, you don't necessarily have to give away the secret sauce, but do you mind kind of giving people love to hear this type of stuff.
Yeah, no. And
what is kind of the breakdown of that?
Well, just give you an example. Like one of the indicators that, I know most, yourself and a lot of traders like to use is the VWAP. VWAP, very strong indicator, because for a lot of traders, if price action is below that VWAP, a lot of traders are underwater, right? A lot of shorts are liking to push that down. That's when you see a lot of these mutual fund guys and the hedge funds and the bigger money trade off this VWAP, right? Because if I'm trading somebody else's money and I'm looking to buy 1 million shares, right, my best price is at the VWAP, right? If I'm looking to get short, well, without moving the market, I need to scale my positions, right? So I need to get in with the best price, which is VWAP. That's usually why you always see the first test of VWAP and usually the second time VWAP test gets rejected. That's usually why, right? Because people were starting to buy that. It's once it finally breaks down, then you see the bias change. So if I'm seeing a stock open up very weak and sell off, and then it comes back into the VWAP, I'm looking to short it off that VWAP, call it the VWAP slap. I'm sure a lot of people have heard that term. But the VWAP is a very powerful indicator. And it's not, you basically take your short or your long as close as you can to the VWAP, setting your stops either just above or below it, not 1 penny. God forbid somebody does that, and I'm going to hear about it. You have to give these stocks a little bit of room, meaning 30 or 40 cents. I know that may be a lot for a lot of people, but you have to give stocks room, right? The biggest mistake I always made, and I'm the first to admit this, I always put my stop 1 penny above, right? You have the high of day, and then you set your stop 1 penny above, and you'll see it come and rip through that 4 cents, take your stop out, and then come back down. So what I learned is don't ever set your stop 1 penny above, right? Give it a little bit of room. I say 10, 12 cents. Let it have that wiggle room.
And again, if you ever, my point is, and we probably have these discussions, if you can't have 10, 20, or 30 cents of, depending on the price of the stock, if you can't give it that kind of leeway, you got way too big of a position size, and that's your first problem. If you're freaking out over a few freaking pennies, you need to get your size down first before you start worrying about other stuff.
Yeah, like some of the stocks I trade now, I used to have that. I would enter position and my stop is like 5 cents away, right? Now my stops are, we're looking at technical support and resistance, right? We're not setting arbitrary stops. You can't just get into a trade and say, well, I'm going to go with 1,000 shares and I'm going to put my stop 20 cents away. Well, that does you no good, because what if the support level is 40 cents away, right? You're going to get stopped out and take a loss, and then you're going to be wondering, well, why did I take a loss? And I actually helped a gentleman out over, last week. We had to kind of sit down and say, look, stop doing an arbitrary stop. Learn where your support and resistance levels are based on where you're going to enter the trade. Then say, okay, well, if I'm going to risk $200 on this trade, my share size needs to be adjusted accordingly, right? If it's 40 cents away and I'm going to take 1,000 shares, you're not risking $100. You're risking 400 now. So adjust those share sizes accordingly. Then if the trade goes right, then we add into it, right? Then you can add on to a winner, right? I don't like adding to a loser and hope it comes back, right? We take a position, we scale into it, and then when it goes right, we start adding into it.
I think what you're saying there, which I think is quite important, is you're looking at the bigger picture and you're just having conviction in the trade. You're saying, I'm going to risk this much and I'm going to have conviction that I'm going to be right on this setup.
Right, because when the whole part of trading is basically we see a setup and we say, okay, well, I like this setup. I know that if I take this setup that whatever your percentage is, 70% of the time I win on this particular setup. I enter here, my stop is down here, my target is here, right? So that's the plan going in. We need to stick to the plan once we're in the trade. We don't, like I said, we talked about before, Tom Brady doesn't get to the huddle, call a play, and then when he hikes the ball, he's about to throw it. He doesn't change the play in the middle of the play, right? The play either works or it doesn't. And be okay with that. Be okay that it didn't work, okay? Maybe it was just the timing, right? Maybe you got in just a little early, right? It's okay. Take the loss, step back, reanalyze your position, look at the chart of what it's telling you, right? We trade the chart, not what we think is going to happen. So I think that – go ahead.
Go on. I think the other important thing is keeping in mind the audience of this podcast is predominantly penny stock traders. A lot of penny stock traders are thinking, well, I've just spent all of this time learning penny stocks. How much of this is going to apply to learning the higher price stocks? And is that not a whole nother challenge again? What would you advise those people?
Penny stocks, regardless of the price, we want to trade what's happening in front of us at the time, right? Trade what the chart is telling you. Don't hold on to maybes and should be's and is that right? Maybe kind of looks about right.
I always say if you have a coulda, woulda, shoulda attitude in trading, man, you're gonna have a bad time, man.
Yeah, I would say for people who are trading penny stocks, and I know that's what majority of the audience is. I would say that instead of going full speed ahead, let's take the base hits as we say, right? Take the base hits. You don't have to trade 2,000-3,000 shares every time, right? Man, just kind of manage your risk a little bit better. Know your risk per trade, right? Find what's comfortable for you, knowing that, let's say, if I take this trade, and things just go in the crapper and it completely reverses on me, I'm okay with losing $200. I'm absolutely fine. I can say, okay, well, that didn't work. We'll just move on to the next ticker. What a lot of people do is they want, they see the set and they're like, everything focuses in on this one particular setup, this one stock, and everything else just kind of gets fuzzy, right? We lose our focus, because I used to do it all the time. I'd be like, well, this stock, man, it's up a lot, right? This thing has got to go, right? It's gapping up. It's got to go, right? It's a low float. It's got this great news behind it. This thing is just going to.
I love how just real quick, and I know I always get yelled at for interrupting by the audience,
you're right.
But no, I just love it. If you're watching it on YouTube, I love how like every experienced penny stock trader always does the air quotes when they say good news. So
it is.
I do it when I'm not even on the webcam, like when I'm by myself and I'm like talking about the news. I always do the air quotes.
Yeah, and that's what it is, because that's what penny stocks they're essentially doing. It's great news for our company. We believe, right, that our stuff, I believe I'm the greatest thing there ever was. That's kind of what the penny stock press releases are all about. Our stuff is the greatest there is, right? We've got this, they always come up with stuff like this great agreement. We've entered into a strategic agreement with XYZ company. Yeah. But there's no details behind that strategic agreement. They just reach an agreement. Well, to me, that doesn't really bode it being up 40, 50%, right? So for me, I'm going to look for this thing to basically retrace that gap, right? Because most gaps get filled anyways, right? If you can remember that, you're already ahead of the game. Most gaps get filled. Whether they come down and they wash out to fill the gap and then go long, that's fine. But you have to remember, when a stock is up, typically likes to retrace its move 50 to 60% and try and fill some of that gap before legging up. That's usually like when you see earnings winners, penny stocks, high price stocks, it doesn't matter. When stuff gaps up, you'll usually see them a lot of the time wash out, and people think, well, that's a short, but they only wash out to fill some gap before they leg up, right? Because you have profit takers in there that were bag holders and are now in the money and want to take some of that money, right? But it confuses a lot of myself, it was included. I would try the gap and go strategy. I'm sure you've heard of that, right? It gaps up, breaks the pre-market highs, then you go. Well, a lot of times I would get just ripped apart because I didn't understand really the bigger picture, right? It was up, it gapped up, it broke pre-market highs. I went in, and then it spiked and came right back down and just got destroyed. What I learned is just learning how to read the press releases a little bit better, right? So I would say for the penny stock trader, it's more about understanding what you're looking at, right? Look at those press releases and try and figure out, trying to read between the lines, right? When you see agreements and things like that, unless they're just disclosing all the details, like if you see penny stock that's got to deal with Apple, that's a good deal, right? That's a good news, right? But if you see a strategic, we're going to, our card readers have, new logos in them, and we're going to brand that. That doesn't really warrant much for me to trade that, other than to the short side.
Something keywords I look, first of all, number one, you want to actually see a named partner, a big red flag. They'll be like, we've entered a strategic partnership with a very respected company. It's like, wait, who is this? And then just another thing before I let you finish, just keys to look for real dollar amounts, not up to $1 million, because they'll try and slip stuff in on you, basically.
Right. I want to know that they're getting $12 million up front in cash. Let me know that what's going on is real, not just that we're having a meeting. We talked about this last time, that we're having a meeting, right? We're thinking of exploring something later in the future. You just have to really read between all the BS, because the whole draw to penny stocks is the price. It's people, well, I don't have much money. I can, trade penny stocks because they're low price. And I see everybody on Twitter making thousands of dollars every day, right? Penny stocks, I'm going to tell you, penny stocks are hard to trade. Steven, firsthand. It's not that – I think the misconception is that penny stocks just go 200-300% every single day, right? They do occasionally. It's not every day, right? They are difficult to trade because of the manipulation behind them, right? Because you have other traders, kind of like myself, who don't really trade penny stocks in the sense that for the price, they're trading them because they know the news behind them, right? Like I used to trade them because of the price. Now I trade them because I see the PRs and the stuff out on them, and I'm like, that doesn't warrant anything, right? That doesn't warrant the move for today. It may later, but for today, you know, if I see an FDA approval, I'm immediately looking on the short side of that. You know, I'm not going to go into all the details why, but that's what I have learned over the course of my trading career is that understanding more about the reasons behind, right? And that comes into biotechs, how to play biotechs correctly. So, I mean, I hope that helps, you know, somebody out there to understand that don't get caught up in the all penny stocks go up 200%, right? You have to kind of step back and analyze them a little more because they are a little more tricky and they are a little harder to trade.
And I fully agree. And just to add to that, and that was my secret that always worked. But I would say I'd look for some news up 50% that wasn't legitimate, and then I'd look for some overhead resistance that was like 60 million plus. And then I think the volume's only 1 million on the day. It's never going to trade 60 million. So how are you going to get rid of all those people who are underwater? And then it would crash, and it would crash every time. And that works. But the problem is when the volume outweighs the overhead resistance, or you get these crazy situations where you just get explosive volume. Then shorts get trapped, early shorts, reshort, and then accounts blow. Including mine.
And then, you know, and like I said, there again, it goes back to chart reading, right? If I do if we have one of the setups that, you know, is a go-to setup, a green to red move, you know, a green to red rollover, a green to red, basically the stock opens up, it spikes up, tops off, comes back through the opening price and goes red on the day, right? That has a very powerful move. But when you see a stock go green to red and then back to green, that's really not ideal, right? If it told me that it didn't like the opening price and comes through that and fails that, it needs to stay down there. When it's coming back through that, that tells me that, well, maybe we need to just cut this off and let it develop before moving on. Because what it tells me is that short move, that short side move is not valid at this point. This still has strength. That was just a quick profit-taking washout. So we need to reevaluate, get out of your short, because on my charts, it usually bounces into some sort of moving average or the VWAP, right? Comes into the VWAP and it tells me that we need to just cut this off. And there's the point of being wrong is okay, right? You look to go short, it didn't work out, cut it loose, reevaluate it, flip it if you have to. Be able to flip that trade in an instant. The short didn't work, go long immediately, right? No big deal. I take a $30 loss here and there, no big deal, but I'm willing to get that back plus more because I'm trading in the trend. And there's another thing, trade with the trend, right?
But I've just got one other question, really. I've got two. One of them you can answer at the end. It's how have you done? Last time you said you were learning how to trade like a robot. That's the last question. How much more of a robot are you? But the question before that quickly is, you've explained some benefits of penny stock trading and some advantages and disadvantages and what to look for and what not to look for. How would you tell a penny stock trader to get into the higher price stocks since this is what you mainly trade?
I would say start by watching them. Watch how they trade, right? That was my thing for the first week is I needed to see how they trade, see how they react off different price levels, right? Because it's not like penny stocks, right? It's a completely different beast. They, in my opinion, the higher price stocks, mid and large cap stocks, they have more follow through in their patterns, right? They tend to, like if you look at Micron, you know, MU, if you look at how that stock trades, I've been trading that for like 2 or 3 months. When it fails in the morning, it just tanks, right? And it usually stays red most of the day. Once it goes green on the day, it usually just takes off and stays green most of the day, right? You kind of get to know these stocks. These stocks, they trade very similar because you kind of figure out their little nuances and their patterns, right? But my advice, or not advice, but in my opinion, if you just kind of watch them for a few weeks and see how they trade, you trade them. Everything is just, you know, trade them as you would any other stock. Trade with the trend. You don't have to trade big share size on these because you get such range, right? I would rather try and trade 200 shares of a $30 stock than try and put 5,000 shares into a penny stock and try and get 20 cents out of it, right? Because the 20 cents is a lot harder to get on the penny stock than the $2 movement of the $30 stock, right? Because those stocks, they have a lot of follow through, and especially if you're shorting, if you're going to short, I don't remember who said it, but they take the elevator down, they stair step up, and then they take the elevator down. And that's very true with the, the other type of stocks. But to answer your other question, emotions are still there. I mean, we're all human, as much as you want to be like a robot, I still get those days where I'm like,
maybe it'll help Steven's trading now that with that neck brace, he kind of moves like a robot. Why don't you get the arm braces on too?
I'm going to take this off.
Yeah. But, I would just say, it's emotions are there, whether you've been trading 3 years or 30 years. We're all human. We all have those emotional days where you're just like, I get stubborn just like any other person. I'm like, F it. I'm going to be right today, and the market proves me wrong. It kicks me in the ass and says, you are wrong, I'm right. So it's just one of those things. I try as much as hard as just to trade what the chart is telling me. I just base everything, okay, well, the trend is down. Everything's telling me that this thing is going to go down, so let me stop fighting it and just go with it. So I think that's what's helped my trading overall, not only from the past couple months, but the past year and a half, is just not being so biased on something, right? Bias will ruin your trading career faster than anything you can think of. Always wanting to be long a stock, regardless of what it's telling you. I don't really understand that. I don't really know why people are so stubborn in only being long a stock. They're like, they see a stock spike up and they go long and then they lose, instead of just turning around and shorting the thing. If you have that ability or that capability, right? Instead of just shorting, they just sit there and just go, well, there's nothing out there, nothing for me. So bias, just don't eliminate the bias part of it, I would say. Just be able to, have that flexibility, right? If you see the short, take the short. If it's telling you that it's coming down, let's just go with that for now.
Yeah, I think, it's and obviously my personal Twitter account is pretty much worthless, but that's a lot of the stuff I goad people about is, it's like I love these guys that will they will never buy a stock. They absolutely refuse to buy a stock, and all they do is call all of the longs idiots all day long. And I'm like, well, you're the same thing. That yeah. I'm like, you're sitting there telling me, okay, look at what the market has done over the last 2-3 years, and you're calling every long an idiot. But then you say bag holder. I'm like, you got the same mentality, and that's why you get torched on the front side. So it's like, have that flexibility. Yeah.
Right. And make sure, I always tell, a lot of people who come to my webinars during, every week, is that you have to develop something that fits your style. Not everybody likes to short. A lot of people are afraid to short because of the infinite loss that you can accumulate, right? So have a stop regardless of whatever it is. Make sure you have a plan going into that, right? The biggest thing I always get is, I'm in a trade, where's my target? Well, if you don't know that already, you're already behind the 8 ball, right? You got to have some sort of point picked out, right? Even if you have a 1-to-1 ratio, it takes a little harder to make money that way, but at least, there's your minimum. Have a 1-to-1 ratio. If you're risking 40 cents, you need to make 40 cents to have that trade even worthwhile. Don't just risk 40 cents and take 10 cents of profit, right?
That's a great point. It's something I talk about every day. And it's like so many newer traders all they'll think about is the stop loss. And they won't even think, they're just like, I hope I make money. It's like, right. Well, what are you hoping to make? Is it 50? Is it 100? Is it 1,000? Or do you, I've got the HODL behind me. Do you think this stock is going to 100,000? Yeah. And I think that's a great point that many need to take into consideration before you hit that buy or short button. What's your goal? Doesn't mean you'll get your goal, but right. What are you hoping to do here? Are you right. Hoping to make $50? Or are you hoping to make 50 grand?
Right. And I always tell the way I explain it is that once you're in the money, pay yourself something. Don't let a green trade go red because your refusal to take a little bit off the table, right? Even if you're under PDT, well, make that PDT trade count, right? Don't sit there and look at it be green and then just watch it come back and go negative on you and then take the loss, right? Let's say if you're risking 20 cents to make, 40 cents, you get a good 2-to-1, 3-to-1 is ideal, right? Once you at your 1-to-1 ratio, then you take some off. You at least paid yourself, and now you can move your stops to your entry. So if the stock just immediately turns around and goes red on you, you're green, regardless of the dollar amount. And I think a lot of traders focus too much on the dollar amount and not the actual trade itself. Because we talked about this last time. The money comes with good trading, right? So a lot of traders are like, well, I got to make $500 today. I got to make $500 a day. Well, that's easy to do if you're focusing on the trade itself, right? Making $500, making $100 is easy to do if you get the consistency part of the trading down the right way, right? People are just wanting to make all this money, but then they get shaken out so easily because the stock pushes against them a little. And there's where you need to give a stock room to go. Stocks don't just go straight up unless you're Steven and you're shorting them. I'm messing with you, brother.
That was a good one. Yeah.
Yeah, I saw Jivo spiking earlier, and I was like, Steven must be in that one.
I was not in that one. Just so you know.
No, I'm just messing with you. But stocks just don't go straight up. I mean, you have these parabolic moves, right? But you got to understand those get extended real quick, and then they want to slam back down to some sort of moving average or some sort of support. So any normal average stock moving on an average day, it's going to go up a little. It's going to pull back. It's going to go up a little. It's going to pull back. And a lot of traders get shaken out too easily, in my opinion, because they're focusing on the money part of it. They see the green, and then they see it dwindle down. They're up $40, and then it goes to 20, and they're like, uh-oh. And then it goes up to 50, and they're like, all right. And it comes back to 30, and they're like, uh-oh. And they panic in a sense, right? Because it's not going immediately up as soon as they push the button. So
but that also goes back to having conviction in the trade as well. And one of the things that I learned is if you're going for 2-to-1, 3-to-1 risk reward, and you've got a plan, don't just panic out and settle for 1-to-1 risk reward just because you got a little bit scared and you want to take the profits. You've got to play for the 3-to-1 risk reward. Otherwise, you're not going to profit overall as a trader.
Right, and you at least pay yourself all along the way, right?
Pay some, but don't take it all.
Right. Like I say, you take a little off. You take a quarter of it off. Pay yourself a quarter of it. Let the other run. Once you hit the 2-to-1 ratio, you take more off, right? Then you have the last quarter to go and run up until you're 3-to-1 and then beyond, whatever. But like you said, don't make yourself lose money because it doesn't go your way immediately. Sometimes stocks push against me 60, 70 cents, even $1, but I know this stock has got, I know where this stock is headed. So on the pullbacks, I don't get shaken out, right? And that comes along with the conviction for one, the share size not being overly sized in, because the share size will make you react erratically because you're Tim said it earlier, if you're sized in too heavy, your emotions become even heavier. So you're so focused on not losing, you wind up losing. So I think for me, less shares is kind of actually better. I make very good trades off 200 to 400 shares a day. That's it.
See, and that's a great point. I think a lot of people overlook that. I mean, again, you don't have to trade. I think a lot of people think, oh, it's a $1. You're trading $1 stocks. Yeah, you got to trade a couple thousand shares, but you don't have to. There's other options out there.
Correct. Right. What if you made $30? You made $30, right? Don't worry about the other guy who made 15,000. His account is different than yours. His risk tolerance is different than yours. So stick to what your account size and your risk tolerance is, right? Kind of enjoy your own process. A few traders asked me because, man, I couldn't stomach standing trading 100 shares. It's like, well, how's that been going for you so far, trading 1,000 shares? Not too good, right? So if that's not working, let's change that, right? If 1,000 shares isn't working for you and less than that, let's see how you react when you're not so worried about the share size, you know? And I think everybody always asks, well, how many shares did you have? That's irrelevant. The share size is irrelevant, right? Was the trade a good setup? Was it a good risk to reward? You know, that's, I think, is the main focus, right? Because when you have all those things come together, the risk to reward and the conviction, like Steven says, the conviction on the trade to keep up with it, there's no reason that you should be emotional. You can just sit back. You can even, a lot of times I just go eat lunch or eat breakfast, I should say. I get in a trade. I know where my target's at. I know where my loss is at. And I can walk away from the computer, go eat lunch, take a walk, go do whatever I need to do, and just let it play out,
Maybe the question's a bit vague, but when you're trading these higher price stocks, how much emphasis are you playing on the technical analysis, and how much is it on the fundamentals?
On earnings, fundamentals do come in it because I'm looking at, we're looking at the earnings report, right? I'm looking at guidance. Guidance, you could have great earnings, but the guidance could be horrible. That's basically telling me that, yeah, we did good now, but long term, we're not going to do so good, right? So if they got bad guidance, I'm not really looking to get in that along. It may pop at the open and then, come back down. But there's a little bit of fundamentals mixed in there. I'm more of a technical-based trader. I'm trading what the chart is telling me at that particular time. With, biotechs are a completely different animal. I'm looking at, depending on what type of cancer drug or if it's for eye therapy, those can be, two separate worlds. So there's a little bit of fundamentals that go in there. Not too much on the, like the financial side of it, but a lot of it, when you trade these higher proxies, you have analysts who give you upgrades. They're looking to upgrade the stock. Like Citibank is a real important player in an analyst call. Morgan Stanley and the big guys, Wells Fargo, those guys, when they put out price targets, they're putting in money for their investors too. So they're not making a $100 call at a $50 stock for no reason, right? They're looking at the fundamentals and all this other stuff to get that stock to that price target, right? So there's a little bit of learning. There's a little bit of a learning curve in there, but it's really not that hard. What most people get shy away from is the price. They're just, it's too high price, right? I don't know how to trade a high price stock. The price. Don't let the price scare you off, right? And like we said before, you don't have to take a lot of shares in there. I have a friend of mine who takes 10 shares of Netflix. He buys 10 shares. Sometimes he'll buy 2 shares of Netflix and can make like $50-$60 in a day on like a $1,000 account. It sounds like, what can you do with 2 shares? 2 shares of Netflix when it moves $30, you can do a lot.
Yeah, but also in the hidden secret that people don't know about with the higher price stocks is there's always borrows. There's always borrows on the short side of the higher price stocks.
You don't have to worry about, like I say. And
that's the thing.
That's the good part because, you don't have to worry about, is this, the shares run out? Has everybody grabbed them up? But,
how much are the locates?
Right. I just think, it's not that hard. It does take a little bit of a different – you have to transition your mindset a little bit different. But in my mind, it just gives you better opportunity. And that's what we're trading. That's why the market is so great. Every day it gives us an opportunity, to do what we love. You're in this because you love it. Obviously, you didn't give up, right? You've come too far to just give up, right? You didn't put in 2-3 years just to go, well, that's enough, right? You do it because you love it.
Yeah, of course. And because you've kind of seen success a couple of times and you can do it if you just cut out that and if you just cut out that.
Yeah, and like the market, we're our biggest enemy, right? We're the ones who stop ourselves, right? Quit fighting yourself, I guess it's the best word. you have the most. Even like you, Steven, you have the ability. You have the knowledge. It's just instilling that, say, you know what? Like myself, come 11 o'clock, I'm not in any trades, long or short. My entry cutoff period is 11 o'clock on the dot. my phone goes off with an alarm that says, do not enter any more trades. And I literally go, I hit the button and I turn my broker off. I turn my platform off, or unlock it down. There's little lock keys on mine, or I'll do something. And I go away.
But for me, it's just stupid things as well. It's like, I used to think, let's catch the top on a stock pre-market, and it would trade 50,000 shares pre, and I think this might be the top. But that is so illiquid that it can double in a couple of minutes. And I just think, just wait till 9 o'clock, wait till the 300,000 shares have been traded, wait till the bigger picture, and don't try and be perfect.
Right. We're never going to – you may get lucky and catch the top here and there, but what you want to do is you want to see the stock give you a reason to short it, right? Let the lower high set in, right?
Yeah.
Let it break the VWAP. Let it break that, when a stock runs up, it pulls back and then it jumps, and it pulls back and then it jumps. Let it break those key levels. Let it break those things down to tell you that those key levels are now broken and we're looking to roll over, right? Don't just because it runs up and then it makes a different candle, the different candle colors. Oh, it's a red candle. We got to go. It's a short.
Honestly, though, I just wanted to be like David Bowie. I just wanted to be the hero. I was like, I can read price action so well. I will catch the top every time. I'm the hero. And I got so much pain through that I was like, you know what it is? I'm not the hero. I'm waiting for the head and shoulders, and I'm going to short that right shoulder. And I'm risking off the high of the shoulder. I'm not being a hero anymore.
I may be dating myself, but then you become the goblin in the labyrinth.
That's fine. I'll be the winning goblin.
Yeah. No, I say just let the stock present itself, right? That's why I'm not an open trader. I don't trade the open unless it meets very specific criteria. It's got to meet like 2 or 3 things for me to want to trade the open. Otherwise, this is what I do at the open. I just watch it, develop it, because then you get that FOMO setting in. Well, the bell rang. Everybody's making money probably, and I'm not. So I better do something, or I'm going to miss my chance.
Yeah, I tell all traders, all new traders, avoid the first 10 minutes like the plague.
Yeah, if I say for trading, it takes some experience. So, you have to be able to withstand big volatility movements. If you're okay with that, by all means, trade the open. I'm not telling anybody you shouldn't trade the open. You can make a ton of money in 30 seconds and be done for the day in a minute. But for those who can't or aren't that level just yet, it's okay to wait a little bit, right? I don't know where I saw it, but the best trading times are actually 9:45 and 10:40, 10:45. These odd numbers, but it's not at the open. But to each its own. If you can trade that and you can withstand all that volatility, go ahead. I've just learned that statistically speaking, I'm not that good, and I can recognize that and say, okay, well, it just takes me waiting 15, 20, maybe 30 minutes before I see something that I know that I can just hit with conviction, and that thing is just going to do what I want it to do. It took me a good 2 or 3 months to learn how to trade higher price stocks and bigger stuff other than what's considered penny stocks. And like I said, again, I give a lot of credit to the guys, some of the traders that I trade with in the chat room over there at Awesome Calls, because a lot of them are, I know at least 4 of them are 30-year veterans of Wall Street themselves, so I've been very fortunate to have that knowledge brought to me, because there was stuff I never even thought about knowing that, about why stocks do certain things. And it's like, how would I ever know that? There's no book I can read on that. There's no YouTube video I can read. It's just trading with people that have that real world, that trading experience, being in the game since the early 80s, early 80s and the early 90s, sometimes back in the 70s. So it's just,
But I think that should be it. I know that penny stocks are, for the people who really love trading and they die hard about trading and they want to do it for the rest of their life and they know no matter what. The obvious thing is to master each area and learn what are the best setups in penny stocks, and when they come, we'll nail them. What are the best setups in the higher price stocks, and when they come, we'll nail them.
Right. And like I say,
that's how you have the most fun.
And that's what I say. It's not that I don't trade penny stocks. I trade penny stocks all the time. But it's not something that I'm just like specifically seeking out every single day, right? If I have, my scanners that alert me to the ones that are gapping up, and I'm not really more or less looking at the percentage. I'm looking at the dollar gap. right? I'm looking at, you could have something that gapped up 100%, but it only gapped up 20 cents. That's really not worth my time. If I see a 50% gap and it's up $6, then that's going to grab my attention, right? The gap percentage is not really the most important thing. I'm more concerned about the gap, how far it's gapped up from its close or gap down. You know, one of the go-to setups I love is the gap down, short squeeze in reverse. You know, I love when it gaps down, it squeezes up, short covers cover, it tops and then rolls over for the downside move. I love trading those. They're so easy and they're so predictable when they do that. So.
I think you've covered a lot of really, really solid points on penny stocks and on higher price stocks, and give a bit of an intro to get into higher price stocks, which I appreciate. I mean, I don't think I've got any other kind of final questions. I definitely would end by saying I want to have a foray into the higher price stocks at some point, because I think in some ways the safer and the less manipulated. And I don't know if you've got any final words on that.
Yeah, I mean, of course, we all know penny stocks are manipulated. You know, you have the super manipulated OTCs, and then you have the really manipulated penny stocks, and then you have a little bit, I mean, everything can be manipulated to a certain point. You know, you can manipulate the way your press release reads. You know, you can throw some words that sound good just to make, you know, things go. But for the most part, I would say there's not as much of the manipulation that we know as in penny stocks, as in the, you know, the mid to large cap stocks, because you have a lot of SEC stuff behind it. You know, the SEC regulations and stuff that they got to abide by, NASDAQ regulations and stuff like that. So, you know, I'm a fan of the whole market, you know, not just one area of the market. I like trading the whole market. I like as much opportunity as I can possibly get in a given day. But just learn to be disciplined during that day, right? We don't have to sit there in front of a computer and just trade all day long, right? The biggest losses I ever had were between the hours of 11 and about 1:30. And that was my inexperience, my inexperience as far as I would lose in the morning and go, man, I got to get something back. I hate being down. I can't take 2 days red. I can't be down 2 days in a row. I need to get some of that back. And here's, you know, I will give you this, Stephen. I watched some of those other podcasts where, like, there's a guy learned to trade in a week. Okay. There's another guy I thought it was really funny. He's like, I got a loan, and you're going to watch me get rich today. You know? He's like, boom, market's open. He's like, market's open. Shit, I'm down. I just lost it all again. It's like, oh, okay. So that's the mentality that it's just out there. You know, everybody thinks you're just I'm going to go take out a loan. Don't do that. Don't take out a loan to go trade. And then you're going to open an account. You're going to trade these low price stocks, and you're going to be rich, and you can just quit your job. You know, it's a little more involved than that. I mean, it took me 2 years to be able to do what I'm doing now. Right. So, I mean, it's a process, and you got to enjoy the process along the way. That's it.
Yeah. And I just wanted to close with that as well, because a lot of people give up hope after 3 months, 6 months, 1 year, 1 year and a half. You were kind of I don't think addict's the right word, but you are full on studying. You are devoting a lot of hours. So for people studying kind of 1, 2, 3 hours a day, it's going to take 2-3 years.
I used to track how long I would study, right? Because, you know, like I said in the last episode, that my study time didn't actually start to about 9 p.m. at night. That's when my kids went to bed, my wife went to bed. I go upstairs and then start YouTube videos, start studying, every chart study, everything till about 2 or 3 in the morning, right? Then I get a few hours of sleep, get up at 6 o'clock in the morning, and look at the pre-market scans, gaps. Even though I wasn't going to be trading, I may or I might not. I just wanted to be involved, right? I want as much screen time, much interaction as I could possibly get. And then while I'm working at my other job, if I had some downtime and then doing HVAC, I was in attics a lot of time. I just sit up there. I literally sit up there in a 100-degree attic watching my phone. I sweat pouring down my face. I was like, I got to get out of here, but I got to watch.
I remember those. I remember those pics. I remember those.
Yeah, and I was just like, you know, that's how much I wanted it. I wanted it so bad that I didn't care if I was sitting in a 130-degree attic. This is the time I had. This is the time I'm going to take advantage of.
And I think that's a great point to close it on. This is the level of dedication that you need. These are the amount of hours that you need to put in. And if you think you're doing 1 hour here and 1 hour there and you haven't got it in 6 months and it's just not for you, then maybe it's not for you, because you need to do a lot more work together.
And, I think the great Kunal Desai said that he got asked that can anybody trade, right? Can anybody do this? And the answer is no. Not everybody can do this. That's just a simple fact of life. Not everybody. I can't be an astronaut, right? I'm not a good, motocross rider. I can ride a motorcycle. I'll probably fall off a whole lot, but I'm not going to be great at it, right? Everybody has a chance to ride a motorcycle. Doesn't mean you're going to be great at it. This is a profession first, right? So like any profession, you don't just try and get into the NBA and be LeBron, right? LeBron was all the hours, Larry Bird, the Michael Jordans, Abdul Jabbars, all the great ones. It took them so many, practice and over and over and over and just years and years and years of doing it that they became great, right? And you have the opportunity, I would say. You got the opportunity. You just need to take advantage of it.
And we'll close it with that. This has been the sequel. It will be a trilogy. I'm sure we'll want to, and I'm sure Bowen will want the trilogy since his internet's dropped in and out. And hopefully I won't have blown up in many more accounts in the meantime.
Well, I hope that next time we do this, that you won't be sitting in that office room there. You'll be sitting at your house. Or where are you at now anyways? You in Dubai?
Yeah. I've been in Dubai for the past 5 years. I was at the point a couple of months ago where I was up like $7,000 in a couple of months, and I was like, sorry the language, fuck this, I'm traveling. I'm trading and traveling, I've got it. I'm banking a couple of grand a month, it's easy. Yeah. and then the market got too bullish and blew us out the water.
Yeah.
So now
hopefully next time we see you that you won't be in your office, you'll be just doing whatever you want. Like I say, I took the time today to just come sit outside, did some yard work, enjoyed the pool, and here with you guys.
Nah, dude, for sure, it's cool. And I'll try and get some tips on you on the higher price stocks, and maybe one day, although I'll not trade them soon because Tim Sykes will break me neck. One day I will get to them.
I'm always here for it. I'm always here to help. I try to answer all the DMs I get, all the messages I get. So I'm always here to help.
Oh, cool, man. Thank you so much for coming on.
Yeah, it's been a pleasure.
Hi, this is Aaron, aka Double A Ron from New York City, and I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the SteadyTrade Podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.